Given the scale of this, $3,000 gold is now the very, very bottom of most assessments. And we're seeing $3,000 gold now being assessed at Bank of America and other banks. De-dollarization process is rapidly escalating, and none of this is yet factored into the paper gold price. And we would expect to see first central bank gold revaluations within this second quarter. So I see us entering a window of opportunity to join big race by global central banks to swap our rapidly depreciating, unbacked fiat promissory notes for physical gold and silver bullion. The race is on, and the only question left to ask ourselves is how much physical gold and silver do we own?
Gold, renowned as a safe haven asset, experienced a significant surge in price on Friday amidst a mix of geopolitical tensions and economic uncertainties. Analysts warn that if the conflict in the Middle East escalates further, gold prices could surpass the $2,500 to $2,600 range. AndrewMaguire, an independent trader and analyst based in London, suggests that a $3,000 price for gold is now widely considered the lower end of price assessments. Institutions such as Bank of America also share similar anticipations, adding to the mounting expectations for central banks to revalue their gold holdings, possibly as early as the second quarter. The World Bank's publication emphasizes gold's unique status as a financial asset free from counterparty risk due to its scarcity compared to fiat currencies. The long-term trajectory of gold prices tends to be upward, offering central banks holding gold reserves an advantage in potential revaluation without the need to sell any gold assets. Maguire highlights recent gold purchases coinciding with the activation of beta testing for a gold-backed commodity currency, slated for introduction at the upcoming BRICS summit in May. In recent years, central banks have significantly increased their gold acquisitions, reminiscent of levels last seen in 1967, as reported by the World Gold Council. Implementing a gold-backed currency initiative requires substantial investment in physical gold, with reports indicating China tapping into its substantial shadow banking reserves for clandestine gold acquisitions. Traditionally, central banks heavily reliant on US dollar reserves favored liquid treasuries for interest earnings. However, evolving perceptions of the security of these securities have compelled central banks to diversify their holdings. Join us as we delve into AndrewMaguire's insights. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
Gold rally has only largely been driven by invisible over-the-counter related monetary gold transactions. What is confusing the analysts trying to understand the gold rally, why this gold rally, and why there's been an increase in the LBMA CME centric flows, they actually don't jive with the scale of this rapid gold price rise, and namely what is officially flowing into central bank coffers. The entire issue leads back to the mainstream media still not understanding the implications of gold being reclassified by the Bank of International Settlements as a first-tier asset class on the 1st of January 2023. This event is what opened up a large increase in unreported, bilaterally settled central bank and sovereign monetary gold demand. It isn't recorded on the COMEX at all. This means that central banks, sovereigns, and institutional bilaterally settled spot gold over-the-counter buying now has to be physically deliverable. And by their very nature, these bilateral transactions are unreported. This opens up spot gold, over-the-counter gold purchases to feed central bank monetary gold purchases. And the lion's share of this monetary gold is being accrued by the BRICS-related Sino-Russian Gold Alliance, which was established back in 2013, but it really waited for this first quarter of 2024 to pull the trigger. Now, it will be looked back on historically that these central bank purchases were being coordinated in concert with Russia and China activating the recent beta testing of Glasiev's green-lighted BRICS gold-backed commodity currency in readiness to be formally tabled ahead of the BRICS May 14th to 19th Kazan summit next month. Now, it's gone unnoticed that this is a multi-trillion-dollar project. It requires some very, very big money to be put into physical gold. And we have it on good authority that to do this surreptitiously, China has been deploying its very large 3.25 trillion of shadow banking reserves. And we'll look at the effect of this beta testing of Glasdev's green-lighted gold-backed commodity currency. But let's first look at how vast tonnages of gold purchases have largely sidelined the LBMA conduit, because it explains why the analysts don't get it. While Russia had largely already divested itself of dollars in June 2021, openly announcing they were removing dollars from its national wealth fund, as of this March, China's State Administration of Foreign Exchange, the SAFE, reported holding, officially, 3.25 trillion of US dollar assets. And while at the margin it has served China well not to openly dump dollars, it is the over 3 trillion of unreported shadow banking reserves that are surreptitiously being exchanged for bullion in large tonnage size. Now, if you recall, in our early January 2024 episode, we drew attention to a little reported Bloomberg report that focused on the concerns made by former US and Treasury official Brad Setster. Talked about this before, that China's reported 3.24 trillion of foreign exchange reserves comprise just half of what he estimates is closer to $6 trillion, which he expressed as presenting a new risk to the global economy.
In a significant development, the upcoming BRICS summit scheduled for October 2024 is poised to herald new memberships, marking a profound shift in the global order. Several developing nations are expected to receive invitations to join the BRICS alliance, signaling a broader coalition of emerging economies. According to insights shared by AndrewMaguire, the focus of the upcoming BRICS summit, set to take place from May 14th to 19th in Kazan, will revolve around Glas's currency baskets backed by commodities and gold. Following beta testing, these currency baskets are anticipated to undergo formal evaluation, potentially triggering a revaluation that could prompt responses from Western central banks. Maguire highlights that escalating geopolitical tensions, coupled with efforts by Russia and China to establish alternative trade routes and clearing systems, are expediting the process of dollarization. The Chinese yuan, in particular, has emerged as a robust contender against the US dollar, with recent developments suggesting its potential to surpass the dollar in leading central and offshore transactions. A report from a writer underscores that the Chinese yuan has gained prominence as a leading foreign currency in Russia, indicating a notable shift in currency dynamics and heralding a new phase in currency development. Let's get back to the interview.
Most recently, this gold buying stepped up significantly on the 20th of March this year. This all concurs as to why, despite aggressive official capping efforts, spot gold blew through 2150 at that very date. Now, while reported Chinese gold buying is being attributed to retail Chinese demand, there is no doubt that it is the concurrent drawdown of this unseen central bank demand that is also tightening available physical supply, which is why it forces the offer to sell physical gold to rise. Now, this counters reports that gold is synthetically being driven higher by large options derivative bets. Wouldn't that just suit everyone's narrative? But in summary, these cross-currents create uncertainty, which indicates we may be offered some opportunities to capitalize on the officially spun gold correction narrative. But this completely ignores the fact that the gold markets are now being physically settled outside the LBMA CME ring fence. This all leads to the BRICS May 14th to 19th Kazan summit next month, which we drilled down to in our last episode. It focuses on the second of Glasdev's two currency baskets, which is backed by commodities and gold. And following 2 months of beta testing, Glasdev's green-lighted BRICS currency baskets will be formally tabled and tested. And when formalized, it raises the revaluation trigger point, very likely forcing a knee-jerk reaction from Western central banks to up the ante before the end of the June second quarter, perhaps even. Now, given the BRICS 10 plus members control, and more to come, control the lion's share of the multi-trillion-dollar oil and energy complex, the scale of this upcoming de-dollarization process just cannot be underestimated. Now, the BRICS adoption will significantly raise the dollar price of energy and oil, of course, feeding an unwelcome inflationary input into the West. It won't alter the gold price, it'll alter the dollar price. In fact, one of my most respected liquidity providers, very closely associated with the Russian-Chinese markets, sees very recent geopolitical escalations and the increased weaponization of the SWIFT clearing system to seriously bring forward the implementation of Glasniev's gold-backed commodity currency. And given the scale of this, $3,000 gold is now the very, very bottom of most assessments. And we're seeing $3,000 gold now being assessed by Bank of America and other banks. Now, given current geopolitical escalations are accelerating, Russia and China's efforts to open up fresh sanction-proof trade routes and clearing systems, the de-dollarization process is rapidly escalating. And none of this is yet factored into the paper gold price. And we would expect to see the first central bank gold revaluations within this second quarter. So I see us entering a window of opportunity to join with a big race by global central banks to swap our rapidly depreciating, unbacked fiat promissory notes for physical gold and silver bullion. The race is on, and the only question left to ask ourselves is how much physical gold and silver do we own?
As we near the forthcoming BRICS summit, where conversations will revolve around currency baskets supported by commodities and gold, what do you anticipate for global currency dynamics and the continuing trend of dollarization? Feel free to share your insights in the comments section. If you found the video insightful, consider becoming a part of our community by subscribing to our channel and activating notifications using the bell icon. Thank you for being a valued member of our community.